Hey everybody, this is Jose Blasco. We are about to get started. This is a sound check. Please go ahead and have a quick message on the chat box to say hello to everyone in our community, which is very nice. And at the same time, now I know you hear me, and therefore I know sound is good, so we can get started on time. So please go ahead and do that. Okay, so I believe everything is good to get started. Here is me in the bottom right corner of the screen. My friends, we are live. So let's highlight the disclaimer so you can read it carefully. This is August 19, 2021. My name is Jose Blasco. Disclaimer is an important thing for you to read. Please read it carefully. It is indeed important information. This is options with options. We're going to be looking at the options markets, ready to put together our trades and basically adapt to the market conditions. Today the market is a little bit on the spicy side, if you wish. Of course, we need to understand what's going on out there, and always, market movements normally equal opportunity as long as they meet our rules. So we will be planning for that. Okay. Could you please confirm if that's okay, that sound is good, not only because you hear me, but also volume is okay? Because for whatever reason, I feel that maybe volume is not right today. It would be good if you could confirm that. Okay, and that way I also get my screen ready here. Okay, so the plan for today, we're gonna be looking at the market environment. We'll look at trades that we have and review them. We'll talk about trade management very briefly and focus on new opportunities to be executed. Thank you for confirming, Clive. Sound is good. How are you, Joe, as well? Ahmed, how are you, my friend? It's very nice to see you all. So let's begin. Okay, let's begin. Let's go ahead and begin our analysis. So here is top. Okay, and we're gonna start with our analysis as always, looking at the S&P. Okay, so let's take a look at what's happening on the S&P. Well, a little bit of spice coming in today. Okay, finally we had a confirmed down climate. Okay, it was time. We had surpassed for a few days number 7, so we were expecting this to happen. So we are now in a confirmed down climate. This is candle number 1. Statistics suggest it's going to be 2 candles. Okay, so let's see what's going on, what's going to happen. But that is normally what tends to happen, and then we go back to a blue climate, and back with the market going higher. Now, of course, auto climate is really powerful to keep us objective and ideally on the right side of the market, but at the same time, auto climate will do nothing unless the on-field orders get filled. So on the right, I believe I said yesterday that my concern, just to use a word, not that is a concern, but the concern, if you wish, was that the next green UFO below was quite far down. And indeed, when that happens, you can see how a great speed of movement happened to the downside. So we may need to see the market stretch a bit more, hit that UFO unless new UFOs are formed, before we see a turning price, bringing that climate back to blue. Okay, so let's see what's going to happen. Definitely, we can see now for like an hour and a half or so, a little bit of basing activity. So large market players may end up placing great quantity of buy orders, and then we get to see a green UFO on the screen. We'll see. So far, the next UFO is located at 435. Okay. We're gonna add a little bit extra analysis today. Something that I point at it before, but I never commented additional on it, which is the max distance, which is an additional measurement on our auto climate. Which here, on the right, when we look at the count, we always focus on a 1 standard deviation, which is what is likely going to happen. Okay, but then here we are looking at the 2 standard deviation, which is basically telling you what a too far distance is. Okay, and in this case, in down climates, a too far distance is 1.01. We are now currently trading at levels of 0.92. Earlier in the day, we actually surpassed 1.01. So in other words, that market is moving too far too fast to the downside, and if it continues like that, like another day, then the probability of those statistics to meet what they're supposed to do is even higher, because then you are falling into a non-sustainable territory where the climate has expanded already based on what statistics suggest, and then it becomes truly non-sustainable, not only because of the amount of time you stayed there, but also because of how far you went. Okay, so it's a true too far, too fast situation, and the market with have this tendency to turn around. Okay, so we're gonna have to see that. Okay. Again, things to watch for. Now, volatility, you can see a huge spike on volatility. Same if we look at the VIX. Okay, pretty impressive increase on implied volatility. The VIX trading at 21.47 right now. So that's a pretty nice one to see. There is a red UFO just a little higher. Okay, so again, it may continue going higher and may turn where the UFO is. Okay, and what's really important about the volatility is also to understand if there is a little bit of a bias from the call and the put side. Okay, and give me a second. There is a little bit of market data delay here on my end, so we're just gonna wait a second. Okay, now, so on the call and put side, you can see that it's quite equal. And to be honest, if we look at the numbers equally, so the calls are now just a little higher than the puts, 14 instead of 13.67, but the difference is very minor. And same as when we look at the options, I was looking at this earlier, it was showing 1.3 in the favor of the puts, now it's showing 1.3 in the favor of the calls, and both are above average. Okay, the calls and the puts are beyond the average, which are the little triangles. So in other words, we are indeed in front of a truly indecisive day, which is often the recipe of when a turning point takes place. So again, we may see that candle to be only one red dot, like it was here. Maybe in the end it needs a couple of red dots, but again, what I'm trying to say is that while the market is falling or has been falling, because now it's back in net 0.04, so kind of like equal as yesterday at the close. But while the market was falling hard and many people got scared probably when they saw the market falling hard, the reality is that when you look at the market internals, there's no reason to be that concerned. Everything is quite equal. The amount of calls, the amount of puts, the volumes, the implied volatility of calls and puts, and the way the market is behaving. Really, the only, again, I'm going to use wrongly the word concern, is that the UFO is located at 435. So we may need to see the market to fall down a bit more before we have a turning point. Okay, so not not too complicated as a market condition. Okay, this, by the way, will lead me into comments I'll have later for FSLR, which is one of the trades that we had that was in the green and is not anymore. But again, I have no major concern given the fact that I don't have major concern about the markets either. Okay, so I'll comment on that in a moment. I missed a few of your messages. How are you, Joanne? It's good to see you. Siderman, good to see you as well. Mario, how are you? Very nice, everyone. Cool. So when it comes to market conditions, again, I would say relatively normal correction in the context of an uptrend. Okay, we see this often. That was similar. That was similar. That was similar. That's what's happening now, right? So we've seen that before. Okay, no reason to get emotional so far. Okay, then what comes next will dictate more about the possible future. Okay, but right now all is normal. Now, second part of the session is to review the trades that we have running. Okay, so if I come in here into TOS, so yesterday I had FSLR and 2 iron condors. The 2 iron condors I got yesterday, as I told you, and again, that was not the best thing for me to share with you guys, but it's what it was. Okay, the 2 iron condors that we had were erroneous, and therefore I ended up closing them both. I managed to get out both of them at around break-even, so I'm out of the iron condors. Hopefully you guys also managed to do the same. If not, I guess you are in the process of doing the same. And FSLR is the only trade I have here which is currently showing $3.5 of PNL positive, which that trade at some point was making like $200 per contract. Now it's only $3. But again, we need to understand what we are doing with FSLR, isn't it? So I don't want anyone to get emotional or next thing you know, change their bias, change their plan, and regret, or things like that. Again, we got into this trade a few days ago. We got in with a bull call spread, expecting volatility to rally because we bought very cheap volatility. Volatility indeed has went up, so that's good for the trade. Basically, FSLR now is trading more or less at the same levels when we entered. So we are kind of breaking even $3.5. So that's not too impressive because we did collect all of that move, and now all of these went against us. Actually, that was the very bad day, right? So all of this, of course, is not so positive, but at the same time, not a major concern. Okay, if I go back to a daily time frame with FSLR, okay, and I was to add study to look at the trend for not only for the symbol, okay, but let's do the symbol too, okay, but let's also add the trend for the group. And you know what, seems I'm in the process, let's also add the trend for, oh, not that one, just click on the wrong one. Also add the trend for the sector. Okay, so indeed, it seems that semiconductors took a little bit of a hit since a few days ago, and it seems that this is impacting for solar. This is impacting the sector overall, which is going down. Okay, but we are still blue. Okay, for the sector overall, for technology as a sector. Okay, in the case of semiconductor, is actually red. Okay, but this is still blue. It's not even gray. Notice the colors. It could be red, it could be gray, it could be blue, it could be gray, right? So we are still in the blue overall for a technology sector. Okay, so and that's medium, right? You know what? Let me put those things all together so they use a little bit less space. Okay, so so for the sector, in the medium term, we can see is blue, right? So now, what if you want to look at the long term? So the long term is blue for the sector. For the grouping, the long term is also blue. Okay, and for the stock, the long term is also blue. So again, remember, why am I doing all of this? Because I want to reinforce the message of when you have a plan, you need to understand why you have that plan and stick with the plan. The plan was to reach a target which is 102, which was supposed to be hit on September 9. So we still have almost a month to get there, right? And therefore, there is no need, even though of course it's not as pleasant to see your trade to point at close to $200 of profit when we were up here, and now it's basically you're back to break even. That's not so pleasant, isn't it? But at the same time, it's part of riding a move on a stock where you have impulses, corrections. We just happen to pick the correction. Okay, so that's what it is. And again, there is no major concern beyond that. Okay, remember this trend study is not about the trend from a direction point of view. It's more about the trend from a strength point of view. And obviously there is direction, but there is also strength, which is color coded. Okay, so blue means still strong. Okay, so not a reason to be too worried. Okay, cool. Okay, so removal. Okay, so we are gonna leave FSLR alone, let it do its thing. Hopefully next time we have a little bit of a push, it goes a little higher, maybe closer to 100, and then the intention was to convert the bull call spread into a directional butterfly, and that would create plenty of advantages. But remember, we assessed that possible tweak when it was here, and it was not making sense as of yet. Okay, so that's why we didn't do it, and then the market moved a bit against us. Again, not a big deal. Okay, so we are fine. We need to be patient in our trades and manage the emotions. Siderman still not out of GLW. Okay, got you. So keep trying. Again, it's not like it's a major concern, but indeed, if you can get out, it would be better. Okay, so this is GLW. Sorry. Oh yes, I did not. Yeah. Earlier today I was playing with some of the settings on the platform, and I changed the color of the grouping. So if I don't change the color, then GLW will not show. Yeah. So here, okay. So you can see that you are still relatively comfortably inside the purple area for GLW. So again, it's not like it's critical for you to get out immediately. Okay, so it's okay to be a bit relaxed. Okay, but at the same time, try to get out. What I want to avoid is that you guys get hopeful about this trade, because I made an error when planning the trade, and therefore I need you to get out of it for break even. Okay, cool. Okay, so now let's look for new trades. Okay, let's look for new trades. The other trades that we had, SKT and so on. I think I made my point yesterday. There is nothing else to comment on that. Okay, so let's get into trading mode. We got 45 minutes in front of us. So let's find a few trades. Okay, so I'm gonna go to my metrics. Okay, and volatility is high today. So in my mind, I have two intentions. Okay, intention number one I have is to find trades that are non-directional, because the peak on the VIX, I mean, you saw that there, volatility pointing at around 17, right? 16 now, real time for the S&P on our continuous implied volatility calculations. On the VIX, it was more, but on the continuous implied volatility calculation that takes care of multiple expirations, multiple strikes that are waiting, all of that stuff, which that makes it quite precise. So we are pointing at 16. I mean, no need to say that this is pretty impressive, right? So in other words, volatility is high. Let's try to capitalize on that volatility. So my first attempt today is going to be to look for non-directional trades in the form of iron condors. Okay, that's going to be my first attempt. Second attempt, I want to replicate trades like the one that we had with Lily some time ago, if you recall, because that was a market situation that was very similar to today, where the market was falling hard, implied volatility was rallying, and we had this opportunity to get into bull puts to pay for calls and then convert that into other strategies. And that was one of the most powerful trades that we had in the recent past sessions. And market conditions today suggest that this could be a good environment to do that. So we're gonna try to find a setup like that, and I will also take advantage to show you a few more tools. Talking about tools, by the way, I'm glad to say, yesterday I said it was almost sure, but today I'm glad to confirm it is sure. What you see in front of you, it's the final version of Top. Okay, Top, my friends, is ready. So now it's all about us as a company internally to set up some processes so you guys can subscribe to it and can start using it yourself. So we are days away from that. Okay, now it's not about working on the platform. It's more about our certain things that we need to complete in our website for registration purposes and so on. So I will keep you updated very, very soon. And by the way, we plan to do something that, I'm not sure if you will like this name if I use it, but I'm planning to set up something that we'll call the Pioneer Group, if you wish. So for you guys that are part of the first generation ever of Top users, okay, you're gonna have a discounted way to get into the Top membership. Okay, so I'll detail that more as we have it ready on the website. So expect that to be ready next Wednesday. Anyway, so let's get into planning our trades. Okay, so what am I gonna do first? Look for expensive options. So looking at mean above 80. I guess you all are with me if I do that. If I go too fast or you are new, let me know, okay? So I can repeat, okay? So advanced option scan, mean greater than 80. And then I got my price 34 or more. Stock filters, everything is disabled. I don't care about anything that has to do with strength because it's non-directional. Scan list, I got my my list, right? The penny increment options list, I got it there. Thank you, Mario. Thank you, Clive. When it comes to earnings, I got exclude anything that reports earnings in less than 3 days. And to be honest, I should go a bit further than that, isn't it? Let's make it 5 days. And then stock price range and auto climate is all disabled, okay? Because again, we don't care about climate right now, it's non-directional. So the one thing I have checked, it's strength levels for daily timeframes as well as weekly. They are check mark and they are both looking at neutral, okay? When I scan for that, I end up with CRM, which CRM is reporting earnings on the 25, which is just a bit too soon, okay? So we're gonna move to a different way to look at premium. Instead of so strict with greater than 80, we're gonna make it a bit more flexible with mean minus historic above 2 standard deviation, okay? This is gonna be a bit more flexible. Now we get more results. And then remember, I got my third way on how to do it, which is even more flexible, okay? So thank you so much for that, Leland. So anyway, so let's go with that one. And again, then I can do, remember that the philosophy is always go from more perfectionist to less perfectionist within a range of options to select in the matrix that gives you an edge, but going from more demanding to less demanding, okay, to add as much quality to the trade as possible, but without always asking the maximum, because when you ask too much, when you get too perfectionist, you end up with too little amount of trades, okay? So we're gonna be flexible, okay? So let's take a look at Whirlpool, okay, and see what is possible with that particular stock, okay? Now, of course, to do our non-directional trading, we need to work on our ranges there, which are absolutely critical and defined, with let me remove the lines, with the probability cone, okay? We need to work on that. And the process I was following yesterday, just to be very visual, because, to me, and I said it many times, it's very important that you understand why you do things the way you do. So I really like to be very visual. Yesterday I talked about, those UFOs, the probability cone, all those things. But at the same time, once you understand what you do and why you do it the way you do it, then anything that saves time, it's something that, I love to do and I love to share. So let me show you a little bit of a more efficient way on how to put the iron condors in place when you are basically focusing and giving priority to saving time. Okay, so I'm going to use the spread select. Let me float it so I can maximize it. And I'm going to select short iron condors. Okay, so this is what we're doing. And basically, yesterday I was going through the process of, okay, let's look at those ranges, and from there just get into the 55-minute time frame, look at the UFOs, and then I was getting into the spread select, and then see if my break-even points are good enough. Well, you know what? I'm just gonna reverse it, because now you're gonna save time if you reverse it. Now that you understand what I'm trying to do with the break-evens, so now I'm gonna reverse it, which means that I'm gonna come in here, and first I'm gonna select expiration dates from here. And basically, we're gonna make it a rule. Well, you could use the first and the second expiration date. I'm gonna make it a rule to kind of skip it, because I kind of prefer, okay, and it's more advantageous and you have seen it, okay, and definitely for education purposes, it's gonna be more useful to us here in the room. I kind of prefer to use iron condors that don't expire too soon. So then it gives me the opportunity to tweak and tweak and tweak. And if a market goes against me, I can convert into an iron condor, an iron butterfly, and then it gives me more, room for demonstrations of things that could be good for you to incorporate in your trading plan. So what I'm going to do is skip the initial 2 expiration dates, so I got a little bit more time, a little bit greater duration for my condors, okay. And then by default, my first attempt will go to the next monthly, okay, because the next monthly and the one after. Okay, and notice I'm going to skip the 2 weekly expiration dates in between. Why? Because those weekly expiration dates in between typically are the ones with the worst liquidity. Okay, not always, but typically. So, I'm going to start with that. Okay, I'm going to start with that. And with that, I'm just going to close my eyes without even looking at the charts. I'm going to look at my minimum range, 2.5. This is a $220 stock. So 10 is going to be my maximum risk. Remember, the minimum range, maximum range refers to the distance between strikes in your spread, and that sets the risk. Okay, so this is $250 risk per trade. This is $1,000 risk per trade. So I'm going to go for maximum 10, minimum 2.5, and then I'm going to go ahead and create 99 of those. And with those being 99, I'm going to go ahead and load my filter for iron condor, click OK, update, and then sort based on failed and pass. And I got many that pass, okay? And again, of course, I don't even know where my UFOs are yet, isn't it? And you're gonna be like, what are you doing, Jose? Okay, yes, so what I'm doing is, I'm looking at what is my highest break-even point. Okay, we got 266, okay? So this seems to be the highest break-even point, 266, 246, 236. So 266 happens to be the highest break-even point, and is using September 3. Okay, so what I'm going to do is, okay, so what is my September 3? September 3, let me grab a line. So September 3 is right there. Okay, and this is pointing at 235, where I can get break-even points up to 260 something, right? So this is telling me there is a lot of premium there. Okay, so you know it's kind of one way to identify where most of the premium may be. Okay, and then from the bottom part, I got 168, 173, 168, 173, 204, 190, 197, and now we get into 155, but this fails. So in other words, it seems that the best I can get there as well is 168. Okay, and this is also using September 3. Okay, so in other words, it seems that September 3 may be the best choice by just looking at the break-even points. Okay, and again, the only way to know if that's the case or not is to now go ahead and plan the trade and see what happens. Okay, and then I can play with my expiration dates, but this is giving me kind of a good starting point, which likely will imply a little bit of less wasted time when looking for the market data I need to confirm my trade. Okay, so 205. Okay, let me take a look at this for a moment. Here I'm going to have to load lots of data to get, okay, good. So let me go ahead and right click format. I got 57% probability on those UFOs, so that's great. And I got plenty of UFOs above and below. So all of this is good. So let's find out where are the other UFOs. So 5,000 bars is what I'm loading now. Okay, and now let's find out where we may have more UFOs. Okay, and where we have more UFOs, you know, we can see more above and more below. And of course, you know, there is this huge, large open space there. Okay, so I'm going to use the green UFOs as my worst case scenario. Notice that that would imply 3 UFOs below and multiple UFOs above, so that's good. And with that UFO being selected, I am now going to measure the distance from the current price to that UFO below, and then move this higher to see what is the ideal UFO for the upper part of the range, which seems to be this guy. So even though I found break-even points higher than that, if I use September 3, to be honest, I don't need that. Okay, with September 3, I am okay with break-evens to be like 255 to 185. That's good enough. Okay, so I believe, unless there is some bad data, which sometimes happens on an option chain or something like that, especially when you go for far out strikes, unless there is something like that, it's looking like, you know, we should have an easy trade with Whirlpool, in the sense that, you know, we found break-even points that were much higher on the option chain, on the spread select tool earlier. So let's go back now, looking for break-evens to be 255, 195 or better, and get to see the characteristics of those trades. Okay, so again, 255. Okay, so here I got 265, 265, 265, 265, and we got 168, 175. The bottom part is 185. Okay, so 168, 173, 178, 183. All of those trades are meeting our criteria. All of those trades happen to be September 3. So okay, so let me simplify a bit what I got on my screen, just to get a bit more clarity. It's too much. I got too much. Okay, it's good. It's a luxury to have too many choices, but at the same time it's confusing. So I'm just now leaving September 3 only. Okay, and recreating my 99 spreads, and updating and refiltering this. Okay, and yeah, I still got so many choices. Okay, this is great. This is really good. Okay, so let's take a look at the returns on investment. We got 38, 40, 50, 20, 80, 40, 31, 28. Okay, wow. So very large reward, return on investments, greater than expected for an Iron Condor, and this has to do with the extra premium. So I'm going to filter out, you know, for trades that have greater return on investment. So I'm going to go for 50. That's going to give me a shorter list. Okay, and that's it. Now that fits on my screen. You can see that the one below here fails. So now whatever I got in my screen is what I need to decide. Okay, so from a return on investment point of view, 88%. Look at that. That 88% just changed to 44. Okay, so that's kind of telling me that probably there is not so much liquidity in some strikes. There are wide spreads. So we'll see that in a minute. This one is also giving me 80%. This one giving me 80% is giving me 282, 205, and that's not good because we need 185 below, so that's not good. Interesting. So the moment I ask for more return on investment, the problem is that the bottom break-even point is not meeting my rules anymore. Okay, good. So I'm gonna have to be a bit less extreme and look for again, let's say 30%, something like that, and sort again and be a little less extreme to find break-even. Here we go. We got 281, 168, 266, 173, 285, 173. Yeah, so those should work, and they are 30 something. Okay, very good. So now let's look at those strikes. We got 170, 165, 280, 285. Yeah, those are good setups. 170, 175, 265, 270. Yeah, all of this is good, but I just got too much data on my screen, guys. So I'm just gonna go ahead and filter again, and this is what you guys will need to get used to. Okay, understand which are the values that help you filter out. So in this case, I'm gonna make my probabilities, okay, to be lesser. By making those probabilities to be lesser, this will help less cases to be accepted, and with less cases to be accepted, this will help me to filter more easily. Okay, so yeah, I still got too many. So let's do this again. Yeah, so we're gonna do 15, 10. Yes. Okay, so and apply the filter, update. Okay, and we got 266, 168. So many strikes that meet the rules. Okay, so now this is the issue of having lots of premium. So now you need to do a lot of analysis because many strikes, meet what you need. Okay, so basically the strikes that meet what we need are those strikes here. Okay, 178 to 81, 178 to 66. Yeah, and this is 39. It's all about 30 to 80. So they look very similar type of trades. Okay, so I want to look into the left because this is to me a bit surprising, to be honest, and that so many strikes are giving such a similar performance while the strikes are located in different places. So yeah, so there is a problem there. Okay, I can see that there are some missing quotes there. Some bid prices are missing, and therefore the simulation is understanding that yeah, we have lack of liquidity here. Okay, so I'm really not happy to see that this very big difference between the bid and the ask. Yeah, this is quite deceiving, guys. Not happy to see that, guys. Okay, so this is telling me lack of liquidity on Willpoor, and therefore I'm just gonna move to September 17 and see what's possible. I'm just going for the monthly, which is more liquid, and restart my process. I'm just gonna reload the basic template for iron condors, then add 99, update, and sort. Here we go. Now I got 3. Okay, so let me see what are the break-even points. We got 242, 122, 232. Okay, so 242. That doesn't work. That doesn't work. Okay, so we're gonna have to skip Whirlpool and go for the next one, my friends. Was a false illusion there for a moment. There was a lack of liquidity on that particular one. Let me float this to my other computer screen. So I'll be bringing in symbols without distorting what I have on the screen. Okay, so then the next one in line, it's Philip Morris, MO. Okay, so here's Philip Morris. So again, let's take a look at the daily time frame. So we can see our, volatility projections there. Let's take a look at the spread, select, and we're gonna do the same thing. Earnings are on October 29, so it's a similar case as before. So I'm gonna do the same thing I did before, which is to go ahead and select, ignore the initial two, okay, and go for the next one to see what passes. Okay, and then construct 99, and then sort based on the spread filter column. And we got one that passes using September 10, giving us a break-even point from 49 to 45. So let's take a look. 49 and 45. Well, that's not good enough at all. Yeah, that's not good at all because this is September 10. Okay, and September 10 is all the way there, and that would be 52. Okay, minimum would be 52 for the range, but then you can see how the break-even point is 49. Okay, so this one with MO is not good. So the next one I'm going to check is Netflix. So we're going to look at Netflix. Okay, let me make this blue. Okay, so blue, here we go. And same story, we're going to use those expiration dates. Yes. We're going to use minimum range for Netflix is 5, maximum is 10. We got the Iron Condor preferred parameters loaded. Good. Let's make 99 spreads. Okay. Just loading. Update. Filter. And let's see what passes. Okay. Lots of data is being downloaded. So it's taking a little bit of time. Here we go. One passes with Netflix. 561, okay, so September 3, okay? So 561, September 3. So back to the chart. This is Netflix. September 3 is here. And this is 582. So 561, it's not good enough. Okay, it's not good enough for that particular case. So we're going to have to go for the next one, which is Texas Instrument. Okay, so let's see what's going to happen with Texas Instruments. Here's the spread select. So multiple expirations, okay? Minimum range for Texas Instruments 2.5. Maximum, I'll make it 5, okay? We could actually go all the way to 10, but let's do 10. Yeah, sorry, not here. Maximum range 10. This is close to a $200 stock, so I guess it's fine. We can afford that. So let's try that, and we'll build 99. Update, sort. Now we got many, and we can see all of this is September 3, 191, 193, 200, 208. So let's take a look at September 3. What is that? So September 3 is here, and that would be 195. Okay, 195 is good. We got 208 and things like that. So we may have a case. Okay, with Texas Instrument, it does look like that we have more premium. Okay, so let's go for it. So 55. And let's begin our analysis. Good, so we got 48% or more with the probability, so all of this is good. We don't have too many UFOs above, right? So let's take a look at Texas Instrument. Yeah, 200 something, to be honest. It's falling into a territory which is above the all-time high. So we won't get UFOs there. So then with Texas Instrument, to be honest, the only way to do it would be to use a shorter expiration date because there is no UFOs higher than that. Okay, so in this case, I'm going to make an exception because we don't have UFOs higher, so we cannot do it longer term. And I'm just going to reset the whole thing. Let's take a look at the strikes available. Okay, in this case, I'm going to do 2 and 5. Okay, and this is a good observation as well, because if I'm going to use August 27, which is 8 days, basically you're going to be in a trade for a week. And if any, you're going to be able to do probably only one tweak. So if the trade goes against you, you may convert it straight from an iron condor to an iron butterfly. And probably there is not much more you can do. Compared to an iron condor, which lasts for a long time, where you can just keep roll, and keep improving the initial risk of the trade. So if I'm going to use a longer term expiration date, so I'm okay to start with a maximum risk of the trade 1,000, because through time, roll, I may lower the risk. But if I only have 1 week and I have less choices to reduce the risk, I prefer to keep the risk a bit tighter. So if I lose, then it's going to be less, okay? Because again, I have less opportunities to massage the trade to reduce the risk, okay? So that's why in this case, even though this is the same stock as before where I went for 10, now I'm going to go for 5. So if we rebuild 99 spreads and update and filter, so let's see if we got choices. We got 1, and that will be 190 to 176, okay? So 190 is where? So let's take a look at August 27. So 190, doesn't work because statistics suggest it may go all the way to 192. Okay, so there is no premium enough in that August 27 to justify the trade. So then we're gonna go for the next one, which is USB. Okay, let me delete all those drawings. Okay, and restart. So with USB, so back to what I was doing, select the following expiration dates, okay? That stock is a $55 stock, so I'm gonna go from minimum is 1, and I'm gonna go maximum 5, okay? So click update, and I need to build 99 of those, and then sort to see what passes. 2 pass, which 57.51, and that is September 3 and September 10 with 58, 50, 73. Okay, so let's take a look at September 3 and September 10. September 3 is here, which 59. Yeah, so no way. Well, actually, close by 57 to 59. It's closer than what I thought, but still is not good enough because this is the best it gets. Okay, so then we are not going to accept this particular trade. Okay, so anyway, so bringing the matrix back to us, so I basically went to my list, okay, Whirlpool, Netflix, etc. When looking at options, okay, based on this condition, mean compared to historic volatility above 2 standard deviation, and it didn't work. So my next choice then is to look at the greatest increase of IV in the last 5 days, okay, and this brings me with the longest list possible, okay, the longest list possible, okay. So this is something that it's indeed now almost a sure thing. If we go through all those symbols, we're gonna find one, okay. You may be more pragmatic than me and start from there, but again, I personally like to go from pickier to less picky within a picky scenario, which is the one I have right now, okay. Now, in any case, I am looking at the time, and while I'm telling you, we go through this list and we're gonna find a few that meet the rules. If that's okay with you guys, I am tempted to change topic and move from iron condors to directional trades, the way we did, the type of trade that we did when we found this beautiful trade on Lily some time ago. And the reason why I want to do that is because the S&P is falling, and the next time we meet next Wednesday, it may not be the case, right? So we may have a better opportunity if we do that. And in that sense, if you guys are okay, please let me know if you're okay. I suggest to have a change of topic, moving away from iron condors, okay? Even though we could have found one, moving into looking for one of those trading opportunities that could be a good one. Directionally speaking, if you recall, using that trick of using bull put spreads basically to buy calls for free, okay? So then, thanks for that, guys. Okay, thanks for that. So anyway, so let's do that. Okay, and for that, I need to show you a couple of things that you will, I believe, appreciate very much, and we're gonna scan for it. So here's, for example, McDonald's. Okay. Now you've seen me use before a tool, which is that tool here that we call Tom Speed Bumps. Okay. You've seen me use that tool, where this tool often has been used to project targets, and you will be like, okay, so if it breaks this high or it breaks this high, so we are going for this target, and it met the target and then turned, right? or if it goes below that low, let's see where it's going somewhere there, and then it turns. Okay, and so now this tool is kind of projecting targets, okay, and not always, but very accurately, and that's why it's a good tool for targets, pretty accurately many times. You catch a turning point within those purple highlighted areas. So, and this is only for when the market is falling enough to clear a prior pivot low or clear a private pivot high. And the question is, how far from that high is going to go before it turns, or how far from that low is going to go before it turns, right? And that's what that tool is doing. And of course, when that coincides with a UFO, then that's when it's magic, right? Because now you have this price projection where the market is supposed to create a significant turning point together with the UFOs, right? And that's what I'm going to scan for. So what I'm going to do is look for setups. Okay, so I'm going to change here. I'm going to get into reversal signals. Okay, and under reversal signals, I'm going to be looking for speed bump supports. Okay, so if I do that, and let me uncheck a bunch of things here. Earnings, I need earnings to be further away, 15 days. Yes, that should do. So if I scan for that, this is now giving me multiple stocks that have been falling enough to now be inside those turning points. So if I look at BABA, for example, okay, and I look at where was the prior turning point, it was here, okay, and now we are in that area, okay? So the idea is, this thing is falling so much, let's grab it intelligently, okay? And in this case, unfortunately, we don't have a UFO, so we cannot take advantage of this opportunity, okay? But other cases may be. So what about BHP? Okay, so look at that. BHP may be a candidate because we have a UFO there, right? So with BHP, so if you project from that turning point, you can see we're inside that, and that turning point, that projection is lining up very nicely with that UFO. So, we may be able to have an opportunity here to catch a turning point on that stock that seems to be beaten like crazily, okay, but maybe it's not so bad. Now, to try to make this just a little better before we get excited about BHP, I would like to add the long-term trend of the group to be up. Okay, and that's gonna narrow my list down by a lot normally, but let's see. Okay, well, I don't have BHP, but I have others. Okay, so in other words, I'm looking for stocks that have dropped a lot inside, that have cleared a prior pivot low, right? But they belong to strong sectors. So if they turn, not only the turn, they may really, really continue. Okay, that's what I'm looking for. I'm looking for those intelligent setups in that sense. Okay, so here we got Colgate Palmolive, and it's meeting the rule, but unfortunately we have no UFO. We have CREE, and CREE may be a candidate. So if we look at the prior pivot point, here we go. We're inside. Okay, we can actually even see already some reaction to that price level. In this case it's 75, and we have multiple UFOs below to back this trade, meaning that if it continues going a bit lower, somewhere here is going to reverse, okay, or is likely going to reverse. So that setup looks nice. Okay, looks nice. When looking at earnings, next earnings are not going to happen until October 27. So we got time in front of us. Okay, we got the setup that we need. Volatility with that stock is not as high as other stocks, but still is 45%. Okay, so it's not like 11% or 15% like the S&P. So we may have something. Now it's all depends on what is it that we're going to find on the option chain. Okay, so now what expiration date are we going to use? Well, since earnings seem to be happening in October 27, so I would like to find out, what's the nearest expiration date to that, which is October 15. Okay, and with that in mind, okay, so if you recall the process on how to do this, okay, and yeah, here I can see liquidity is really not advantageous. Okay, beta spread is way too wide. Yeah, so let me try to get another trade here, okay, before we spend time on CRE, because liquidity, it's not good enough. So let me get into the matrix. Intel, with Intel, liquidity is going to be good. So we got no UFO. Yeah, no UFO on Intel. So what about the 2-day time frame? Here we go. So we got a UFO on Intel on the 2-day time frame, 51%. So we may have something here. Okay. Again, the beauty of the speed bomb tool is that it's not time frame dependent. So if you go for that pivot low, it would also give you the same measurement that if you did it on the daily time frame. Okay. So it's very objective. It doesn't give you the problem that often we have when we switch time frames where many things change. In this case, it's not the case. Okay. So daily time frame or 2-day time frame shows you the speed bump in the same place, lining up with a UFO, and for sure Intel is going to be liquid. So earnings for Intel are happening on this date, which is October 28th. Okay, so we are dealing with October something expiration 2. Let's take a look at the option chain and let's see if we can have a nice trade on Intel here. October 15 is the nearest I can get to that date. Now here, of course, we can see those premiums to be very reasonably tight. Okay, bid and spread, very nice. Okay, and now here we got many expiration dates. Okay, and again, so what's the intention? Well, the intention is to catch that stock either at 51 or at 45. That's the intention, because if it falls in here, it's very likely going to turn, right? So I want to set up my bull puts around either 51 or 45. Of course, 45 is going to make it so much better, but also I may not get premium enough because you can see it's only 35, okay? Only 35 cents. So in any case, let's try. So what if I use the 45 strike, which below has 42, okay? So if I use 45 and 42, okay, above at the money, okay, what can I buy with that? Okay, well, if I sell the 45 at 33 and I buy the 42 and a half against, that's 22, that's gonna give me 11 cents of credit. If I do it twice, it's gonna be 22. So I could buy the 60 call. Okay, if you recall, the technique that we used with Lily, I'm gonna explain that quickly because we explained that before, was to sell a put, in this case the 45, to buy a put below, in this case the 42 and a half, to do this 2 times. This would provide, based on what I just said, okay, this would provide 22 cents of credit, and now use those 22 cents of credit to buy a call, which the call it seems we can buy is going to be located all the way here, which is the 60 call. Okay, that's what basically I just saw on the option chain. Okay, so sell the 45, buy the 42, and then buy the 60. Okay, and do 2 times the bull put. Now, I believe that's going to be very disadvantageous. Okay, but we're going to try anyway. So let's edit the spread. We are using October. Okay, we're going to add 3 legs. I'm going to go from down to up. So down are the puts, up are the calls. So we are buying the 42 and a half below. We are selling the 45. And then we are buying the 60 call. And this will be 2 units. Okay, so the puts is 2 units. So if I do this, okay, sell 2 of the 45 put and buy 2 of the 42 and a half put, get some premium, and for that pay for the call. So notice that I could do this trade basically for free. I can do this trade for 1 cent of credit. Okay, and this trade got 17 delta, meaning that if the stock goes up, you're gonna make money. Let's graph it. Okay, so here's the trade. Okay, if the stock goes up, you start making money. So if I bring my data window here, so you can see the P&L. So this is where the stock is right now. As the stock goes up, you start making money. Okay, stock goes there, you make 129. Okay, why is that? Because you got positive delta. Okay, now of course the speed of making money is very slow because it's only positive 18 delta. Why? Because I'm using the 45 strike. Okay, now the beauty of that is that this trade is crazy safe. Okay, because the 45 strike implies the stock needs to drop like crazy to get there. Okay, so let me float this window. I'm going to put it there on the side, and we'll come back to this in a moment so we can compare. Okay, and Actually, talking about compare, so I can just compare here actually. Okay, I can just go ahead and compare. So I'm going to create another spread here. So I'm going to copy the primary spread, and I'm going to change the second spread so we can compare both spreads together. Okay. Now the second spread I'm going to do, I'm back to the option chain, is not going to be using the 45 strike because again, it's that one is very nice, but it's so far down that it's going to give me very little delta. So the next one is going to use around 50. Between 51 and 49, I got 50. So let's go for 50 and see what happens. So if I shoot for 50 and I do 50, 47 and a half, right? So the 50 and the 47 and a half on the put side are here. So I get paid 108. I pay 61. Okay. So this is a credit of, let's say, 40, something like that. So if I do it twice, it's like 80. So this allows me to basically buy the 57 and a half. Okay. Maybe the 55. I don't think so, but let's try. So if I do sell the 50 and buy the 47 and a half and buy a lower strike such as 55, so this is going to cost me 7 cents, 6 cents. Okay, so it's really, it's almost, okay, almost as good, isn't it? This one cost you, this one you get paid 1 cent, this one you get paid 6. Now what about we do one strike higher, 57 and a half? So if I do that, now this will be a credit of 50 cents. Okay, so you get paid 50 cents. Okay, that allows you to make money even if it stays where it is. So now take a look at the difference. If I zoom in here, the difference of how steep the blue line is versus how steep the orange line is. Okay, so this trade is going to pay much more. Okay, while the risk is the same really, because you have strike price increments of $2.5 twice. Right? So what does that mean? That means that the risk of this trade is $500. Okay, $500 minus 52 cents, which is the credit collected. Okay, so $500 minus how much I said the credit is 52 cents. Okay, that's the risk. Okay, no, sorry, minus $52. Okay, not 52 cents. So that's the risk for 48, which by the way, you can see here. Okay, max risk of this trade. So notice the trade above got a risk of 499, the trade below got a risk of 448.5. So actually it's better. Okay, it's a better trade. And therefore, this is gonna be our choice. From a delta point of view, it has a delta of 43, right? Instead of a delta of 18. So, it's indeed a better trade. Okay, so this is the trade, my friends, that we are going to take. Okay, taking advantage of the current market condition where the market is falling. And again, we are not following the climate here. So here we are just grabbing, let's say, grabbing a stock at a discount, if you wish, type of approach. Okay, even though we are doing it with a high delta, we are not doing the classical stock at a discount strategy where you sell a put and you wait for the stock to be put to you. We are kind of trying to do that with a spicy delta. So if the stock starts moving higher, now we're going to make money on the call, and now we can go ahead and we can close the bull put. So and then sell a call against, like what we did with Lily. If you were on the trade, you know what I mean. If not, I will lead you through the process. And now, we are in a better position. Okay, so that is the plan for the trade, my friends. We're going to do this one. I'm going to enter the trade, and I guess this will bring us to the end of the session. So this is Intel Corporation trade INTC. Okay, INTC. We are using October expiration right there. We are going to be doing something that does not exist by default. So I'm just going to select sell, and I'm going to pick something with 3 legs, which is a butterfly. So then I can customize it. So butterfly has 3 legs. Okay, so let me now go ahead and make this custom strategy. Okay, custom strategy where I'm going to buy an option above, sell 2 options in the middle, and buy two options below. Make this a bit wider because I don't see 1 and 2. Okay, and above is going to be a call, below is going to be puts, and we said we're going to sell 50, buy 47.5 on the put side, and above on the call side buy the 57.5. That was the plan. That is 54 cents. Okay, and again, let me double check that with the risk graph. Okay, where now you can see this is what I love about being able to float windows. Now I got top on top of TOS. Okay, so now you can compare what you do with one platform with the other one. So it avoids to it helps to avoid mistakes, right? So we are looking at this compared to this. Okay, that's what we're looking at. Okay, and I got indeed the 57.5 on the top, the 50 in the middle, 47.5 in the bottom, puts and calls. Okay, so we got the puts below, the call above. Okay, and then the quantities 1 to 2. Okay, +1, -2, +2. So all if the same. Of course, this is real time, -51. This is delayed in the case of my TOS because it's simulated, so it shows delayed. So the values may not be exactly the same, but it's a good reference. Okay, so we're gonna go with that, and let me place an order here, and then I will leave it on the screen so you guys can take a screenshot. Here we go, and hopefully this is a screenshot that you guys can take, and hopefully we get filled very quickly. So we are in this trade with Intel. Again, this is a directional trade, taking advantage of the market, basically having a dip. Please, guys, let me know how is it going out there. We are about to conclude the session. The entry is now. This is the entry. Okay, this is the beauty of this type of trade because it allows you to not to be that precise with timing. The entry is right now. Remember, even if the stock stays the same and never rallies, you're gonna make $49, which is the credit collected. So this is a directional trade that somehow also acts like a non-directional trade, right? It's a little bit of a trick, even though we cannot take advantage of this every day, because for that we need premium and we need a market to fall hard. Okay, and this is what's happening today. So perfect time to do it. Ahmed, you got filled at 52. That's a great credit. In my case, oh yes, I got filled too. Yeah, I got 51 here in my case. Perfect. Okay, so let's do this. I'm just gonna document this trade. So back to top, I want to show you as well how I'm gonna document this trade. So I'm just gonna come in here, and the trade we selected, which is this one, I'm just gonna right click to copy, and that trade that I copied, I'm just gonna get it there in my positions window, which by the way, I can get rid of Caterpillar. We don't have this one anymore. And I'm now gonna paste this trade. So then we can go ahead and, monitor it. So the fields I got are 49 for the call. So on the call side, we got 49. Okay. On the put side, we got 111 and 61. So 111 and 61. That's what we got. So currently this trade is losing $2. Of course, it's the spread. And now let the stock do its thing. Okay, that's what we got here in that particular scenario. And we're gonna be able to track this trade multiple times in the future. You can come in here, right click, and just send this to another risk graph, send this to an options projection. We'll be working on all of those things, guys. On what's gonna happen to this trade. If nothing happens, stock stay flat, we're gonna make $51, which is the credit. Okay, but what if the stock rallies? Okay, now we start making money. What if the stock rallies more? Now we make more. Now what if implied volatility drops? Okay, so now we're gonna have an impact. What if volatility rallies? So we're gonna be able to monitor this throughout the life of the trade and get to understand well, what is it that this trade is doing for us. And if the stock goes to the infinite, so this trade makes a lot, because again, you have the long call, isn't it? But again, we're gonna be tweaking all of that and projecting it and monitoring it and dealing with it in a proper way through time as we manage the trade. Okay, my friends, nice to have you join me in today's session as well as yesterday. We are done for the week. Okay, back next week again. Exciting times, very exciting times with the launch of top. I'll let you know more next week, guys, because we are doing a launch. Um, for us only first, okay, before the world finds out that we have it. Um, for sure, feel free to share out there with the trading community that top is now ready. But at the same time, for you guys being our guys, being our community. So obviously, we're gonna have a special advantage for you guys, which I will explain next week properly, and we'll discuss all with detail. Okay. But anyway, you guys take care. Was a pleasure to spend as always this little time with you. It's always my one of those very special moments of the week where we get to thread together. So it's always a very happy moment for me, guys. So keep up the good work. See you next week, and take care, my friends. Bye, everyone. Nice one, Joe. 53 is nice. Take care, everybody.